Reserve Bank is a central bank of the country. Reserve Bank is a central bank of India. Like India, every country has its own central bank. In the case of US, Federal Reserve is a central bank of US. In the case of Canada, Bank of Canada is a central bank. In Australia, Reserve Bank of Australia is a central bank. For European countries, around 27 European countries, European Central Bank is the central bank of the country. So, these central banks is the authority who produce currency and supply currency, circulate this currency and decide the interest rate in the country, control the inflation in the country and promote the financial inclusion in the country. So, central bank of the country has different rules. Reserve Bank of India is the central bank of our country and they are doing different jobs of monetary and non-monetary functions. The monetary functions include this currency issue, currency circulation, interest determination, and the non-monetary functions like supervisory and promotional functions. So, all this done by the central bank. The central bank concept in the country first introduced by the Hilton Commission, which is appointed by the British government to study the Indian currency and coinage system in 1926. So, Hilton Commission, which is appointed under Hilton Young, a renowned British economist. So, he is the person who first recommended to set up a central bank for the country. So, Hilton Commission is the first authority, first commission who recommended a central bank for the country. But the British government at that time was not so serious to set up the central bank in the country till the Great Depression of 1930s happened. That Great Depression of 1930 shook the world. Many European economies gone collapsed. American economy had great losses. And because of some repercussions of this Great Depression of 1930s, around 450 banks in India gone collapsed. 450 banks in our country gone collapsed. Then the British government became serious and they seriously started to set up a central bank in the country. In 1934, a central legislation passed in the central legislative body of our country, that is Reserve Bank of India Act 1934. According to that act, Reserve Bank was set up in 1935 in our country. 1935 RBI, Reserve Bank of India, set up. And the first Governor of RBI was Osborne Smith. Osborne Smith, who is not an Indian, he is a British. Osborne Smith, who was the first governor of RBI. So, this RBI Act has different sections. There is different schedules also in that act. The second schedule of Reserve Bank of India Act 1934 depicts about some banks on which Reserve Bank of India has a major control. The deposit ratio, the reserve ratio of those banks will be decided by the central bank, RBI. CRR, SLR, those topics we will discuss in the coming modules. And the banks which are depicted in the second schedule, Schedule 2 of RBI Act 1934 is known as Scheduled Commercial Banks. Scheduled Commercial Banks. And these scheduled commercial banks have to keep a certain percentage of reserves of their total deposit they are receiving from the public as a reserve in the Reserve Bank of India. They have to keep a certain percentage of total deposits they receive from the public as a reserve in the Reserve Bank of India. That reserve of deposit is known as cash reserve ratio. Cash reserve ratio. They have to keep this amount of deposits as reserve in the RBI, that is cash reserve ratio. So, those banks which are depicted in the second schedule of RBI Act. Those are scheduled bank. CRR, SLR, those topics we will be discussing in the coming modules detailedly. In 1945, Bretton Woods, that is IMF, World Bank, those are the big financial institutions which controls and which functions to for the better performance of global economies and global financial stability, set up in 1945 through Bretton Woods Conference. Bretton Woods Conference in 1945. Bretton Woods Conference in 1945 set up IMF and World Bank. At that time, India didn't get independence, but India was also a party to this Bretton Woods Conference, and India also a signatory to create IMF and World Bank. For India, India is represented by RBI in that summit. India represented by RBI in that summit. At that time, C.D. Deshmukh is the first RBI Indian governor. C.D. Deshmukh is the first RBI governor who is an Indian, represented RBI and country India in Bretton Woods Conference. So, C.D. Deshmukh is the first Indian governor of Reserve Bank of India who represented India in Bretton Woods Conference. So, RBI is the party which represented India in the Bretton Woods Conference, which is before independence. And 1948, the Reserve Bank of India got nationalized. What is nationalization means? 1948, Reserve Bank of India got nationalized. Nationalization means conversion of the ownership of a company from a private entity to government. If the company's ownership converted from a private to government owned, then that company is nationalized. Reserve Bank of India nationalized in 1948. Like that, State Bank of India nationalized in 1955, and many insurance companies nationalized in 1955, and some commercial banks nationalized in 1969, which means conversion of ownership. Before 1948, out of the total ownership shares, ownership stocks, which is equity shares of the central bank, only 4.4% is owned by the central government. Only 4.4% is owned by the central government. But in 1948, through RBI Ownership Act, government acquired the remaining 95.6% shares of RBI, which were at that time held by private parties. Government bought from those private parties, and they become the sole owner of Reserve Bank of India. Now, 100% of share of Reserve Bank of India is held by the central government. So, in 1948, Reserve Bank of India got nationalized. So, nationalization means above 50% of total equity shares, total stock of company is held by government, then that company is a private company, or that company is get known as nationalized company. In 1955, government nationalized insurance companies. The insurance sector get nationalized in 1955. Till that time, the majority of all of the insurance companies were held by private parties, either Indian companies or foreign companies. In 1956, by acquiring the shares of all these private entities, government set up LIC, Life Insurance Corporation of India, who is a monopoly in insurance sector till 1990s before liberalization. This LIC is set up by acquiring the shares, full-fledged shares of 150 in Indian insurance companies, 150 for Indian insurance companies, and around 60 foreign insurance companies. Buying the shares of all these companies, government created LIC. Till 1990s, government is a sole owner in the sole party in the insurance sector. So, insurance sector is nationalized in 1955 through an act, and LIC is created in 1956. Like that, Central Bank of India, that is State Bank of India, that is SBI, which is nationalized in 1955. Before that, SBI is known as Imperial Bank of India. Imperial Bank of India. Before 1955. Because till that time, the major shares of SBI was held by private parties. In 1955, SBI nationalized. Then 1969, Indira Gandhi government nationalized 14 commercial banks. In 1918, again 6 commercial banks also get nationalized. So, if the ownership converted from private parties to government, that is known as nationalization. Reserve Bank of India nationalized in 1948. Now it is solely government owned entity. And the Banking Regulation Act of 1949 given many other responsibility and authority for central bank RBI. Now banks are promptly under control of central bank, and they have to abide by the guidelines and the norms created by central bank, and they have to deposit some amount of their total deposits as reserve in central bank. All these authorities for Reserve Bank of India is given by the Banking Regulation Act of 1949.